What's going on, traders? Welcome back to another video where we are day trading using price action. Today is a day after Thanksgiving holiday, and to be honest with you, I expected for market to be really slow, but we had a huge amount of bars, and the bars were really big. So the number one way we adjust our money management system when we are trading a fast market like today is we have to go for 10 tick target profit. Your stop loss is really going to be significant, and you have to follow the sound money management system. You cannot afford for one losing trade to wipe out your 2-3 winning trades. All right, you will be then forced to revenge trade. You will be making a lot of mental errors, and you don't want to be trading from that state of mind. So adjust your target profit to 10 ticks. Always keep your stop loss below the signal bar. If this is the entry right here, your stop loss go one tick below the signal bar. You cannot put it in the middle, because a lot of times you will get stopped out on the noise. The market will correct. The market will pull back, trap few more people before pushing higher. You never want to get stopped out on the noise, because market will push it higher and you will be missed. And you will be angry you're not part of the trade. Keep your stop loss where it belongs. The price action structure helps you to protect your stop loss. Now, when we are trading a fast market like this, we follow the same price action rules as always. All right, so and on the chart we can see we have a strong bearish downtrend where we have a break and multiple legs to a new extreme. All right, we have to draw these trend lines. You guys can see I keep my trend lines all over the chart because it helps me identify the context. That's what you have to do as a price action trader, and you keep it simple. All you have to do, you draw these trend lines and you wait for break and a new extreme, because once there's a new extreme, traders will attempt, once there is a break, traders will attempt to create a new extreme, and after new extreme, we expect correction or straight up reversal. From that point on, after this downtrend played out, market created a series of higher lows and higher highs. All right, and here you could be a little bit confused at the very beginning, because we just had a break at the very start of the uptrend, but that's okay, because a lot of times in the overnight session, there can be a break way too early, but traders will not consider it as a valid break. So this explains why there is a break now and new extreme is forming later. As you guys can see, there are multiple ways how you could draw this trend line. Initially, I had my trend line higher like this. You can even potentially find your trend line something like this, but this really doesn't feel that great, because this really doesn't take into consideration the price action at the very beginning of the uptrend, and this is way too short term. You're basically limiting this amount of price action from this one, so this is not really the way to do it. You want to have as much price action as you can, and this really fits nicely off the lows. All right, so step number one, locate the trend line, the bigger pattern, because bigger pattern takes precedence. Once you have bigger pattern, all you do is you look for high probability setups, which are two-legged pullbacks at the key entry point. You either take two-legged pullback at the EMA or two-legged pullback at the trend line, all right, or support or resistance line. While you're in this bigger pattern, there are going to be corrections, and you need to separate these corrections with trend lines, because you want to see a break and the new extremes. That's how you know that the correction is over and it's safe to be looking to go long from the key entry points. All right, and this is still very early pre-market open session, so let's start talking about setups today. From this area, this is 2 hours before the market open somewhere around here. So 2 hours is the earliest I would recommend starting to trade. And we actually, let me move it a little bit lower like this, because you guys can see how nicely it fits price. You guys can see we have a micro double top, and since the context is bullish, we are making series of higher highs, higher lows. All I'm thinking about is a second entry long at the key entry point. So this is a micro double top, and it resets the count. So we have a first entry long pullback, second entry long is a two-legged pullback at the exponential moving average. This is a horrible signal bar, doji, but I marked it as an example because next time it can be a better bar. So EMA, take a look how EMA holds prices. It's not like here where we close below EMA and EMA is starting to get in the middle of those bars. EMA is holding prices. We are making series of higher highs, higher lows, two-legged pullback at the key entry point. This is a high probability setup, high success rate. It pushed higher, instantly turned down, push higher, turn down. At this point on, we're starting to look like a trading range. You're starting to move sideways. EMA is getting flagged in the middle of those bars. There is starting to be wedge pattern, because this trend line is connecting to this resistance, and you know these wedge patterns are quite dangerous to trade. So I think it is really best to just sit on your hands here. You don't want to be forcing any trades while the EMA is in little bars. It's kind of flat. There's a new high, first entry long, second entry long right here, and it's, you know, halfway coming off the trend line. You broke the trend line, but you closed below EMA. I mean, if you're following the rules strictly, let me mark this trade. I really didn't like this trade, but if you are trading only for a short period of time and you're following the rules, you will probably take a chance here. But once you get just a little bit of experience, you know that something is going off here. This just doesn't feel right at this point on. But it is a two-legged pullback at the key entry point, so I'm going to mark it because you cannot cherry pick, especially if you're learning and you have a new high, first entry long, second entry long failure. All right, but you're not interested in taking second entry long failure because the overall structure is bullish. The context is bullish, so we're looking for reasons to go long. So this entry was a double trap because it trapped all the people going short that thought they trapped people going long. And you cannot go short because this is the first break of this entire uptrend. And after break, traders will attempt to create new extreme most often than not. All right, so this is how you trade. Simple price action. You have a break, you wait for price to create new extreme, but you want to see a bullish confirmation. We can't stay above the EMA and keep pushing lower. So as we push higher above EMA, we have a high-low setup, which is a confirmation of bullish momentum. Two key entry points are holding, trendline and EMA. This is how you know that it's safe to be buying and looking for new extreme because price confirmed it. Price moved higher and you have officially new extreme. All right, you have a new low, first entry short, second entry short, failure. You don't want to go long short on a second entry short because this is an uptrend. And even though you have a new extreme, you still don't want to be going short yet. You want to see if price to push below EMA and there is a trend new beginning before you're going short. All right, after the new trend is pushing below EMA, that's when you can go short. Now, I didn't like taking this failed second entry short yet because you just had a new extreme and there can be, you know, the trend may be over. You don't know it's going to make a few more pushes higher. But once price created this first entry long pullback, second entry long, small little bar, low risk, EMA is holding prices, second entry long at the key entry point, you can see that the price is struggling to push below EMA and we're most likely going to go higher. So this is a high probability setup. Are you guys seeing the patterns and the similarities? All you do is you draw the trend line, you stick with the context because the bigger trend line takes precedence, and you just take the high probability setup, second entry at the key entry point. All right, that's how you trade the price action. You don't worry about picking tops in uptrend. You don't worry about buying at the very high of the move because you're afraid of missing out. Just wait for the pullback, wait for the key entry point, and your odds will be on your side. The market push higher and we have an overshoot, which a lot of times lead to a break of a trend line or straight up reversal. That is a new extreme. Remember, I have to keep drawing my trend lines because they will keep you on the right side of the market. Actually, there was a trend line is a little bit wide, a little bit like this. Now, there's a new high, first entry long, second entry long, bad signal bar, 3 ticks bullish, bearish body. You already move way too high up. You have a new extreme. I don't think you want to go long here if the downtrend is in play. And there's a now first entry long, second entry long failure. I mark this trade only for advanced traders because you're still close above EMA. You never know if you're going to make a few pushes higher. I don't like taking this trade personally, but a lot of experienced traders can recognize that we are at the very high of the move. And once you come from the one side of the trend line at the very finishing stage of the trend, you're most likely going to go to the other. So this is a common trap where everybody, beginner traders are afraid going long at these lows at the bottom and they want to see the market proven. But once the market is proving to them that it's bullish, it's already way too late. All right, market keeps pushing lower. And this is how you have to identify that something is changing because uptrend played out with the break, new extreme. So I'm going to ditch this shortened trend line because this is not now a correction. This is now a trend in itself. This is a reversal pattern, reversal trade, not reversal pattern. This is a reversal trade. So I'm going to draw my bigger, slightly wider pattern. Look how high nicely it fits. Now you may see that I haven't marked a single trade because all of these trades are just first attempts, first entries, new low, first entry short, new low, first entry short, new low, first entry short. These are not two-legged pullbacks at the key entry points, high probability setups. I'm not concerned that the market is going without me because it can fail. I want to stack my odds on my side, so I'm not going to take a bunch of first entries. Remember, EMA is pointing down, indicating bearish momentum. Trendline is intact, indicating bearish momentum. Uptrend played out, no longer bullish momentum. Everything is, bearish context. So when the context is bearish, I'm looking for second entry at the key entry point. So market created a new low right here. This low is lower than this low. You guys can see I have a new low. First entry short, pullback, second entry short at the key entry point while I'm looking for a new extreme. All right, break of a downtrend, new extreme is going to most likely follow. Second entry, two-legged pullback to key entry point. This is a high probability setup. It took a little bit, quick, easy scalp, and take a look how the structure is changing. EMA is pointing lower. We are in this downtrend, and here we are starting to get sideways. EMA is getting flat. A lot of bars are going sideways. So you have a slightly what looks like a double bottom. You have a big bullish move up, and you have a new low. First entry short, pullback. Second entry short, failure. But you cannot go long yet. I mean, this is a gigantic bar, 7.5 points, so there is no way you're going to go long here. But you still don't have a new extreme to the downside yet. So you still want to be a little bit patient here. And you don't want to start counter trend trading too early. But once market, this is once again the double trap. First entry short, second entry short, failure. But it failed. It ticked higher, instantly reversed, big bearish bar, pulled back into the trading range, and most breakouts of these trading ranges will fail. All right. Once again, signal bar is too big, so I marked it only as an example. But this is how price action reacts. And now you officially created a new extreme for this downtrend. You have a failed breakout to the downside. All right. And most breakouts of trading ranges will fail. Quick, easy scalp. I didn't like taking this trade myself, but we have a set of rules that we follow. To me, it felt way too bearish for me to fade this breakout, but it worked for a scalp. And it instantly turned down lower. And this is a huge indication because after you have a new extreme and you have a failed breakout, the bullish momentum is supposed to push market higher like this. This is what's supposed to happen. Instead, on the next bar, there was an instant bearish reversal and a move down. Once I saw this, I knew I have to find my bigger, wider downtrend. And why? Because I did the same thing, but I was recording my live trading session a few days ago. I had a downtrend, I had a break, two legs to a new extreme, and I had an opportunity to fade a breakout. The signal bar is bad, and look what happened on the very next bar, big bearish momentum push market lower. If this is a new low, bulls are supposed to be active and they're supposed to push market higher, and since they didn't, we instantly made a move down. This is what told me that I need to expand my downtrend, all right? So it's extremely important to see how price keeps reacting after the new extreme. Plus it fits nicely here. So yeah, so here we are. So this is what told me that I need to kind of expand the downtrend. And plus this felt really bearish. The uptrend already played out. We moved way too down. You're far away from price to have any chance to retest this new extreme. And there we have a first entry short pullback, second entry short. I didn't like this trade at the time because it formed quickly and the bar was really big. This is a 4-point stop loss. So, but it is according to rules. So I marked it in case you got trapped here. I understand, but the signal bar was quite big, and I was, was sitting on my hands. And there once again, there was the double trap entry. Same thing right here. First entry, new low, first entry short, second entry short, failure that failed, new low, first entry short, second entry short, failure that failed. Coming off two key entry points, small bearish bar, you're risking much less. This was a great trade. Uptrend played out, confirming the bearish downtrend. And yes, so hopefully you understand that the context is now bearish. And once again, do you see the similarities? You're just focusing on the two-legged pullbacks, on this at the key entry point, or possibly failed breakouts. You're not worried about anything else. This is how the price action is supposed to be traded. If you miss this trade, don't go short at these lows. Don't have a fear of missing out. It's okay. Let the market go without you. There's going to be always another setup around the corner. And we have a failed breakout where? Below the important key level. All right. All you have to do is mark the low for the day. And this is the price action just works like a clockwork. However, I don't like buying this yet because when the downtrend is fairly strong, you never know how many pushes down you're going to make. So I think it's better to just wait. Don't pick a bottom. Why? Because the downtrend doesn't have a new low yet. The downtrend is valid. This is just a first break. So let the bullish correction play out. All right. We cannot ignore the bullish correction. There's uptrend working high, little break, new extreme. There's a little bit of a hidden second entry long. I didn't like it at the time, but I marked it because this is now a new low, first entry short, second entry short, failure. And then, well, it looks like a hidden second entry long because we didn't trigger lower below this bar. So it kind of looks a little bit weird, but you close above EMA, the momentum is still bullish. So I can see why you would try taking this trade, but I was quite confused at this area. I didn't take any trades at here because I have a just first break of this overall downtrend. So I'm expecting for price to create new extreme according to price action rules. But at the same time, we keep pushing higher above the EMA. There's a spike in the channel. So I have two conflicting beliefs and I don't know what to believe. First, I'm leaning more towards selling, but the spike in the channel looks valid. So I'm just sitting on my hands basically. And that's the best thing to do. When the worst losing trades are the ones where once you enter that you're breaking the rules, you're being too eager. I mean, you're afraid of losing money, missing out, all the trading errors. If you have a losing trade and you are patient and you take an entry according to rules and it just fails, that happens and you're going to be able to stomach it much better. But it's hard to stomach a losing trade when you should not be taking the trade and yet you took the trade. That's, where it really messes with your confidence. So I really don't like forcing trades. Even if you have to be sitting on your hands for 2 hours, that's what you have to do if you want to be consistently profitable. All right. So there was a new high, first entry long, second entry long, and the context is overall still bearish. You're pushing below EMA, but I was still afraid of this spike and the channel being valid. So I didn't like anything. There's a new low, first entry short, second entry short, but once again, two conflicting patterns. So maybe if you're really advanced, you can recognize it, but I just like sitting on my hands here. Finally, market confirmed. Look how now it pushed below EMA and made another leg down, confirming the bearish momentum, creating a new low, first entry short, second entry short off the exponential moving average, and each new low is starting to be lower than the previous one. Then you have a breakout pullback, two key entry points, big bearish bar. You guys can see how the context is now much easier to understand than here. This is why you have to wait until price action gives you clear direction to the downside. You just stick to the EMA and market keeps pushing lower, keeps pushing lower. You have an overshoot, which leads to a break of a trend line. You have a new low, first entry short, second entry short, but you close above the EMA and it's a little bit hard to take. But once again, first break of this downtrend, so expecting a new extreme. I was asked a question how I feel about buying, fading the breakout, and my answer was I don't like it because of the bearish imbalance. If I draw a trading range like this, take a look how each new low is lower than the previous one. There's a strong bearish imbalance. We cannot even make it to the middle. If I draw it to middle like this, look at this, we cannot even make it to the middle. There's a strong bearish imbalance constantly pushing lower and lower, and this is why where I don't like fading these breakouts, even though, for example, this would have worked. Don't really force the entries because you're waiting for a new low of this channel and this bigger pattern as well. So finally here you have a new extreme formed, and after new extreme you can expect correction or straight up reversal. And how do you know they're going to be reversal? Strong push above the EMA, new low, first entry short, push above the EMA confirming bullish momentum grade, second entry short, failure. You close above the EMA, big bullish bar. This is the first break of this shortened down uptrend. Break, you're expecting a new extreme, and this is a high probability reversal pattern. Two legs to a new extreme, which tells you uptrend played out. Even if I'm going to draw my trend line like this, I have an overshoot, which leads to break of a trend line or possibly straight up reversal. So even though you have a first entry long, second entry long, take a look how big this bar is. You cannot go long at the very top of the move into this key level after the uptrend played out basically. I don't like this wider a little bit one, but I just show you that if you drew this one, you're still going along directly into the top bar is way too big, key level is in play, there's an overshoot, so you have to be careful. Okay, you cannot just blindly trade the two-legged pullback pattern. Market push down, push back up, you have a new low, first entry short, second entry short, horrible doji bearish bar, this bullish bar is way too big. At this point on, it's starting to get confusing. This is already, I wasn't trading at this point, this is already hindsight, but I can guarantee you I'll be quite confused at this area once we are consolidating. It looks like a trading range without any clear structured high and low. I would just be patient here. But there is a first entry long, second entry long below EMA, but as you pushed above the EMA and two key entry points are holding, this is a higher low. This is now a decent entry because you're still coming from the failed breakout of the below the key level. Bullish momentum is confirmed, market push higher. Once again, you have overshoot. Same thing situation right here. I'm going to show you so you can see how price action reacts. You have a downtrend working lower. Don't forget drawing these short-term trend lines. They will keep you on the right side of the market. Break, new extreme. Once you see a new extreme of this downtrend, then you know it's safe for you to go long. High-low setup. Same thing right here. Same thing up here. Similar. Okay. Two key entry points are holding EMA and the key level. You're waiting for a new extreme because it's just the first break of this uptrend, and price just created two legs to a new extreme. So that means the uptrend played out, but you're not going to pick top just yet. You want to see a high probability reversal pattern, okay? And you have a new high. First entry long, great. You push below EMA. Even if the first entry is already below EMA, that's a good sign of a bearish momentum. Second entry long, failure. Big bearish bar below EMA. You haven't moved far. This is a perfect textbook reversal pattern after uptrend played out. High probability setup. And market push lower, break, new extreme, and the market basically closed because we closed early today. So hopefully you guys had a great trading week. Remember, it takes time. If you are struggling and you have losing trades, it's all part of the losing process. It's all part of a learning process. Learn from your losing trades. Don't just close the shop and go home. You have to open your charts, analyze your mistake, analyze your thought process. What I used to do, I used to study my charts 5 to 10 minutes, and I used to think that is enough, but it wasn't enough. I had to force myself to really stare at the screen for 20 or 30 minutes so I can really soak the patterns and the knowledge in. So you have to first learn to see it after the fact, and then you will slowly learn to see it live. All right, and don't force trades that are not what you feel like the trades you can read. All right, focus on only on the entries that you feel comfortable taking, even though you may read it wrong, but it's important for you that you're not guessing. Okay, you have to feel like you know you are following the rules. That's important. And stick to the two-legged pullbacks. Forget about these first entries, forget about current trend entries, and you're going to do good. All right, so I'm gonna wrap it up. If you made it to the very end of the video, you're probably enjoying the content. So like the video, subscribe to the channel if you're interested about day trading, and I'm gonna see you guys in the next one. So take care, everybody.